Hey traders, I just want to bring to your attention a potential sale opportunity on the US dollar versus the Norwegian krona. I know a number of you are still short from the very start of this move to the downside since all the way back in May actually. Well, guess what? You've got another opportunity to sell. For those of you who aren't in this big move, which you're still in, then here's a potential opportunity to grab a slice of the action. Today has closed as a bearish pin bar reversal, intersecting with this level just here at 7.9722, and we have, curiously enough, we've got confirmation that we're still on a downward trend thanks to the order and separation of these free moving averages. We've got the 20 below the 50 below the 200. There we go, that's our objective measure. But what is interesting about this is the complex retracement into this level. We've got a free wave ABCD pattern where we've got A, B, C, D. This is the completion point here, and we've got the bearish pin bar reversal at the end. What is more as well is the fact that it's a shallow retracement, taking the Fibonacci down from the most recent notable swing high all the way back in June to the very bottom. We can see that it's just rejecting the 382 Fibonacci retracement, which is a shallow retracement. Of course, there's nothing wrong when markets retrace and reject a shallow retracement in terms of a Fibonacci or lower Fibonacci number. It shows there's speed of momentum in the market, certainly if it does carry through with the continuation of the prevailing trend. What is interesting as well with this one is that it's a classic ABCD pattern in that A to B equals C to D. We have symmetry between A, B, C, D, and if we just take that line drawn from A to B, it equals C to D. And typically ABCD patterns mark pretty realistic, or reliable should I say, places where the market's going to reverse. And we've seen ever since towards the beginning of September, we've seen this complex retracement up here. A lot of people thought that we're going to see the continuation at this point here. We didn't quite get it. We had this choppy mess here, but now we've got just where a lot of the amateurs are thinking, okay, it's reversing now, I've got the high low here. We don't necessarily. We've still got this huge barrier in the way, just above 800. And if we take a look at the bigger picture here, we can see that old support, which has been broken, typically reacts with new resistance, and we've got potential continuation forthcoming. What is interesting with this one as well is if we take points B to A, like so, we can see that today, end of today being Tuesday, bearish pin bar reversal is rejecting the 1.272, and typically when we look at ABCD patterns, we see the completion of them at the 1.272 or indeed the 1.618. Now, if you look at the 1.272, we can see that it just coincides with this level. Well, I say level, I mean the point where price is rejected before previous, when prices come back to test this horizontal level at 800. Prices also closed below 800, 800 being a round psychological number. So we've got quite a bit in evidence in support of this trade. Big round number, completion of ABCD pattern, and we've got, of course, symmetry in this ABCD pattern, and the 1.272 extension acting as our resistance, or coincide with this zone of resistance, should I say. Alright, so how are we going to trade this? Well, what you could typically do is place an order at the break of the low of today, being Tuesday, and stop loss above the high, and continue the wait and see if we're triggered into the trade. If we're triggered into the trade, then that's quite a reliable indication that we're going to see some downside movement. After all, it will be the first time in quite some time that the low of a bar in this retracement has been breached. We've got 1, 2, 3, 4, 5, 6, 7 trading days when the low has not been breached. That is relatively significant. So if we have, say, for example, tomorrow being Wednesday, if that breaches the low, then that would be a good sign that we are seeing momentum shifting from bullish momentum to the upside, or dare I say momentum, a short-term gasp in the market prior to a continuation to the downside. Okay, so that is US dollar versus Norwegian krona, and the conservative entry would simply be the break of today's low low of this bearish pin bar reversal, stop loss above the high, and just hanging on in there. And if we are triggered into the trade, then it's validated. If we don't get triggered into this trade and we have an inside bar, and we can reasonably conclude that there is no momentum to the downside, so we kill the order, delete it. And if we are triggered into the trade and we have a bullish pin bar reversal forming the next day, and the high of this bullish pin bar reversal is breached, then the setup is invalid as well. Okay, so that is dollar NOK. Happy trading, folks.